Good afternoon, everybody, and welcome to Live Market Analysis USA edition. My name is Carl Capolingua. I'm the market analyst over here at ThinkMarkets Australia. Yes, Australia. You might be thinking, hey, what the hell is this guy down under talking about US stocks? Well, I think I'm pretty good at it. And I think what you're going to see hopefully over the course of the next better part of an hour, you'll agree with that as well. We're going stateside. We're going to find the best stocks in the US to add to our portfolios. The agenda is pretty simple. Find the Q&A window if you're watching me on Zoom, or if you're watching me on any of the streaming services, YouTube, Twitter, LinkedIn, and Facebook. You'll have the ability to ask me a question as well, and I'll give you my best technical and fundamental reader on that. Let's head over to the charts first and foremost. Just 30 seconds on my style. I'm a technical analyst. I probably won't know what most of the companies we're going to be talking about today do. That might bother you, and if it does, there's probably a little red button somewhere on your screen right now you can click on. I recommend you do it, and off you go. But if you are interested in seeing how a technical analyst analyzes the market pretty well, I think, then don't press that button just yet. Maybe give it another 5 minutes before you make that decision. Hello, Max. Welcome. Doug saying AFR, NASDAQ rebalancing. Magnificent 7 will be the biggest downsizes in the rebalancing. Not sure what that means. I'll have to look into that later. Oh, he's asking for comment. You got me a question without notice there, Doug. Downsizes in the rebalancing of the NASDAQ. Okay, well, I guess some of them might, therefore, by the fund managers, if they've got a smaller weighting, fund managers might need to sell a few of those. If others are getting a bigger weighting, fund managers might need to buy a few of those. Trust me, none of that's a surprise to the people that matter, Doug, and this is the point. All of that will already be reflected in the chart. So we can look at charts of Starbucks, Mondelez, and Booking Holdings if you like. It's actually asking about Starbucks, so let's do that one now. SBUX, if I'm not mistaken. I'm not mistaken, on screen here. And again, I'm not going to profess to know at all what Doug's talking about, nor do I care, Doug, to be honest. But I can certainly give you technical analysis on this, and then we can look at the company valuation. It's very sideways. I won't spend long on this because I don't think I need to. First and foremost, I need to see a healthy uptrend, or at least signs in the short-term trend that there's a possibility of healthy uptrend coming. The uptrend is not healthy. We're in the amber phase here. You can see, well, how can you see? The color's orange. Okay, so that's how you know. It's a pretty good indication it's amber. And what does it mean if it's amber? Well, it means that the uptrend is losing momentum. So the two moving averages I've got here, which are the 144 and 233 for the uninitiated, are starting to converge together. That's how simple it is. So for those of you who keep hounding me, hey, Carl, can you send me the Pine script for TradeView? It's not that hard. I don't hide much from you, but leave that one with me. But I'm telling you now, it's just convergence in the moving averages turns at amber. Pretty simple stuff. And that goes the same for your short-term trends, which are up here, which are down as well. And, convergence between moving averages is telling you that, by definition, the trend you're measuring using those moving averages is losing momentum. Okay, upside trend losing momentum. So we're going to amber. Just be cautious about it. Ideally, you want to see it expand, those moving averages expanding apart, telling you it's just maths that the price action is accelerating. Short-term trend is down. The price action is pretty awful. Well, look, we've got this sort of a pattern through here, and then we've got a bump up towards the top of it. I know I'm stylizing, but not good enough. And then the candles, whilst this is very impressive, it's not enough to get me involved. And this is just driving me nuts. My lines are dashed at the moment. So let me draw one now that it's not dashed. There we go. Look, above here, I might get interested. And if it did something like this, I might get interested again. But until then, this is a giant pass for me. I'm going to head over to Perry, because Perry's going to no doubt give me something that's bottom left, top right. Here we go, as expected. I'll just zoom that out to my normal range. This is wonderful. I've got nothing bad to say about this. In fact, it's the perfect example of exactly what I'm looking for. Just the most wonderful long-term uptrend. You can see those moving averages 100% are expanding, as are the shorter-term moving averages. And for the uninitiated, we're looking at the 21 and 34. And this philosophy, it's a philosophy of only buying stuff that shows me an improving uptrend, and not owning stuff that doesn't, I guess, is the best way to do it. And we can talk all day long about what some of these companies do, but honestly, I don't care. The people who are buying and selling the shares, the ones that are creating the supply and demand, you can't argue about supply, demand, and price. They have done that research, and that's all I care about. So I'm going to jump on their coattails. The other thing we'll notice here is the price action is quite good. And now that I've got the lines working for me, we're going to draw these. A little bit of hiccup there, but otherwise through here, absolutely perfect. I wonder if we get a line through there. I don't think we do, and I think this line extends completely to the end there. I'm guessing if I look back far enough here, okay, I'm going to see a little bit of a little bit of pressure coming in. Oh, I didn't. No real reason there for that little compression in the price action. Then I stand corrected. Maybe just a bit of a shadow of 20, but we are through 20. And look at all the white candles, white candle after white candle after white candle. It just tells you that regardless of what the rest of the market is doing, and I can compare what the rest of the market is doing down here very quickly, because what we're doing here is comparing the strength of this uptrend to the strength of the uptrend on the NASDAQ composite. And we're certainly beating the NASDAQ. The NASDAQ has accelerated, actually, so it's actually starting to beat this one a little bit at the end, but not enough to get me worried. This is accumulation. The only way you can get a white candle is if you start low at the open and you finish higher than that by the end of the day. And all sorts of fear, uncertainty, and doubt, no doubt, were thrown at the market on all of these days, and yet the fund managers, that algorithmic trading flow, that ebb and flow, just computers just buying, and the computers on the sell side were just not motivated to get in the way of that. We're seeing, therefore, prices rise. Ordinarily, Economics 101 suggests that when price goes up, we should induce more selling into the market, and we're not seeing that. If anything, we're seeing selling move away. And that's because we've got a really great company here. And I know I do this quite often. It's frustrating for some people. Let me get rid of that. I do want to point out to you the perfect setup. Okay, so it's one thing to say it looks very good here, and Perry, you know where I'm going with this. So no doubt, 100% happy to go plus 1/3. But the perfect setup, and I'm not here every day of the week. I'm only here on Fridays, and I only look at what you tell me to look at. Okay, these sessions are largely driven by you, but right here, this one is, let's call that the perfect setup where we would like to buy. And if you see that, I guess it's pretty obvious then, given it's perfect, what you want to do with it. Okay, and whoop-de-doo, of course, we can see what's happened in the future. But even if that had collapsed from there, I would still call it the perfect setup. Okay, because I don't know what's going to happen next. Let's look at the valuation on this. So we're going to head over here to our Thomson Reuters Refinitiv Icon spreadsheet. And Thomson Reuters, one of the world's biggest financial data aggregators, of course, have this product called Refinitiv Icon. It costs you about $2,000 US per month to get access to this terminal. And from that terminal, I derive through this spreadsheet various broker data. And we have 43 brokers covering Microsoft. Okay, we're about to change from Microsoft, but while we're here, let's do Microsoft. Why not? We're here. And those 43 brokers each submit their estimates for various financial data to Thomson Reuters, who then aggregate that and give us what we call broker consensus estimates. And we also have historical data in the bag. And we can see here with 43 brokers covering Microsoft, obviously it's a very widely covered company. Their average price target is $348.81, allowing for 1.7% upside to the Microsoft price, which we'll actually look at as soon as we get out of this screen for completeness. And then we can say we have 19 strong buys from those brokers, 25 buys, 7 holds, and the one strong sell. I don't know who that is, but they are a little bit on the wrong side of the market. The next place I like to go is my EPS line, because the rest of it at the end of the day matters less, I think, than what the company is actually able to return to shareholders. And that is the EPS line. And we want to see bottom left, top right here, which it certainly is. So through pandemics, through supply chain shortages and wars around the world, through inflation and rising interest rates, we're still able to grow profits well. And we're able to do that into the future, so much so that we've got a 15% compound annual growth rate over the next 3 financial years, which is as far out as I like to go. Given that compound growth rate and the fact that we have a median forward PE over that look-forward period of 29.2. So if we're buying today, we can expect, if these 43 brokers are right, that we're going to be paying about 29 times Microsoft's earnings. Okay. Now, I don't know if they're going to be right. Okay. And don't tell me if they're not. Okay. Because it's not my fault. Okay. These aren't my numbers. So you are taking a bit of a leap of faith, but I guess that leap of faith is based upon the assumption that those 43 brokers, and we're talking about Goldman Sachs, Citigroup, Bank of America, all the biggest, smartest people in the world have done good research. And if they've done good research, well, there's no reason why they can't be right. Probably they're going to do better research and come up with a better one-year forward median PE than all of us listening to this presentation right now, as smart as we might be. Probably not. So let's assume that's right. Is that a good price? And that's what the spreadsheet's trying to understand. Based upon this growth rate, which is substantially better than the market average. Market average, 8, 9, 10%, maybe in a good year. Market average PE in the US is probably, 15, 16. Maybe it's a little bit higher. Don't quote me on that one. Either way, we've got better than market average growth. We are paying a bit more than the market, but is that a reasonable price? And for that, what I like to do is I like to go back over the 5-year historical range and say, well, what am I paying if I buy it today, and what am I likely to get over the next 3 years compared to what other investors have been prepared to pay for Microsoft in the past? Now, it doesn't mean that the past is going to happen in the future, but where does what I'm paying relate to what people have paid in the past? And I think we're actually getting it a lot cheaper today than we have in the past. So there's nothing really in here to tell me that my valuation is incorrect. And my valuation for Microsoft is 384.47 to be precise to the cent, which means you've got 12% upside. I'm a bit more bullish on Microsoft in terms of valuation than the brokers, but I don't think I'm completely at odds with them. And there's certainly nothing here, no red flags here to suggest that if I looked at the Microsoft chart and I thought it was a buy, I couldn't run out and buy it. And ladies and gentlemen, this is my style of fundamental analysis. I have no business going out there and working out what the revenue is going to be for Microsoft for the next 12 months, 2 years and 3 years. I couldn't work it out even if I wanted to. And even if I did, it wouldn't be as accurate as what these guys are going to get. So my fundamental analysis is a direct reflection of my technical analysis, which is following the trend. And all I'm trying to do here is follow the trend. Now, this isn't why we came here. We came here to look at VRRM, which is just the greatest code. Vroom, all right? It just makes you want to get on board. Verra Mobility, I'm guessing they do something with scooters and things like that. That's my guess. Not as many covering, obviously, this company. 6 brokers looking at it. 2067 is their average price target. We're still waiting for some of that historical data to come through. There it is. 2 strong buys, 2 buys, 3 holds. A little bit polarizing. Let's check out the EPS line. Is it bottom left, top right? Not really. I'd say that's probably got something to do with COVID and the ability to actually manufacture these things, have workers in factories, and then people go along to showrooms and buy some of those mobility vehicles. But a massive, massive bounce back. You can't deny that. Pretty good through here, a bit slow through 2023, but not bad growth through there. That is having a bit of a fit because I need to set that to the right value. EPS, look, 9%. It's about market. It's not as good as, say, Microsoft, but we're not paying as much either. I think we're probably getting it at around market rates there. Historical range, well beneath the 5-year historical range, and therefore there's nothing really so sinister in here to tell me that I can't believe my valuation, which says that maybe the growth isn't enough to justify the PE, even though the range is pretty good. It's fair valued, and my valuation not that far off what the brokers are suggesting. Let us head back to the charts because I want to do Microsoft, obviously, seeing as we've done the fundamental valuation for it. MSFT, it looks fine. I mean, is there anything there that tells you you shouldn't buy it? No. Is there anything in the fundamentals that tells you you shouldn't buy it? No. I think it's bounced back really well, actually, off this short-term uptrend zone. The last time we bought it was here on this day because you had no choice, compulsory buy on that day. And it's pulled back since then, but I don't think you're all that disappointed. And to be fair, it hasn't really given you much of a reason, has it, to exit since then. So pretty happy with it. If you didn't have it, I've got no objections in copying and pasting that over and going plus 1/3. And if you are viewing these sessions for the first time, you might be saying, what is this plus 1/3 business, Carl? And you can see all the pluses. A great example of how we do things here in live market analysis. You can see where I started to put the plus 1/3 on it. So the way I look to enter a company is to say, well, I'm not going to put all my money on it straight away. And let's say, and just using round numbers here, I normally invest $1,000, okay, on any particular company. Just totally round numbers. You do what you have to do. What I like to do is divide that into 3 parts and put the first third in when I see my first signal. And then if I see other reasons to buy it, I then add the third and the third. And I can actually go beyond a third. So I might end up having twice the normal position on a particular company. You've certainly seen reason to do that here on Microsoft because the chart has been so good. There was a little minus 1/3 there. So you can see where we've taken a little bit off the table based upon that candle. Why that candle? I didn't like it, For the people that watch me long enough, they know why I don't like it. Big black candles annoy me a little bit. And we took out that little point of demand there. Okay, but we didn't sell all of our shares. That's the other thing. We've got a great trend. We don't want to be jittery and get all out either. We want to keep some skin in the game. And really all we're doing here is adding probably back that third maybe if you didn't get in prior to that. Let us keep moving. To Perry's next one, IDCC, which certainly is one we've done before, I'm pretty sure. It rings a bell. It's definitely been coming up in my scans. And it looks amazing. I'm going to go ditto for VRRM. There's nothing on the chart which tells me I shouldn't buy it. And therefore, for me, I just have to go plus 1/3. Now, what's tricky here, it's easy for me to write 1/3 on things. What's hard is I do run regular scans to the US. I ran one 2 days ago, and I just had it was 1,600 stocks came up, and I shortlisted, and it's still so hard even then because I ended up with, magnitude 50, 60 stocks equally that I could go plus 1/3 on. And this would be an example of one of those that would end up on that list of 50, 60 stocks. And how do you narrow it down from there when they're all almost identical? And the question then is, well, it comes down to your risk management, how small really you can make your trades and how many trades you can have within the capital you have. And then you're going to get to a point where you just can't add any more. And that's it. You start to have to chop and change maybe between some of the ones in your portfolio that aren't doing as well and trying to rotate them into opportunities like this. But I think that's amazing. Immaculate chart. I can't fault it in any way, Perry. So well done on that one. I think it's easier in the YouTube video if we kind of do them as we go. Because I do commit in these sessions to checking out the fundamentals when we find one that we would happily buy. And I can't tell you what's going to happen here. These are not my numbers. Just reiterating, we get what we get, and we're not getting much here. We've only got 4 brokers covering InterDigital. From what we can see, though, they're quite bullish on it. 11% upside, 109.25 is a target price there. And that's quite unusual for a stock that's actually had a great run up to this point, because normally brokers are lagging with their price targets. So for them to have that foresight, I think is actually pretty impressive. And the 3 strong buys, 1 buys, that's quite convincing. And the EPS line is not convincing. We did have in 2019, before the pandemic, a big drop there. I don't know why, but funnily enough, in the pandemic and then post-pandemic, it bounced back. So it's actually shot the lights out then. Massive growth into here, but then we're expecting a contraction into there, which means I'm not going to get much of a valuation for you on that. So without understanding enough about what's causing this, I'm not the one to comment on it. I'm not going to waste any more of your time trying to do that. Okay. If I don't know, I don't know. I'll be the first one to tell you that. Let us go to the next one then on the list, which is ON. ON Semiconductor. Hey, you got me interested straight away. Semiconductor stock. Let's zoom that out a little bit. It's good. And let's zoom it out. It's very good. And let's just do what we're supposed to do here. And maybe if you're watching the first time, you might be a little confused because I'm not doing all that much analysis, am I? Because it's just 1/3. It's everything I want to see. And you can probably see other opportunities in there where we've seen, the kind of what I call, perfect setup. Even that little candle there is not bad. But that one certainly, plenty of opportunities in the past to add 1/3 to this one, and no reason not to do it. Actually closed above 100, and that's usually pretty convincing as well. I typically like to get them, just for your reference, I like to get them when they are closer to the green zone, but there's nothing in here to tell me that I shouldn't buy this one. And it is going to be tough sometimes, especially in the market we've got where things are starting to really move. It almost feels like it was easier a few months ago, wasn't it? When things were just a little bit sort of steadier and a little bit calmer, and you're able to get in nice and close to that green zone. but now things are starting to hot up, and there will come a time. Where we do have some issues with that. Yeah, let me just keep going. I was going to show you something else. Look, this looks great. Again, I know I'm the broken record here, but there's no reason why we shouldn't do that. And we'll have a look at the valuations of each of these. Nice little breakout through the zone. The trends are good. And I know there's a little bit of consolidation through here. I know you might say, oh, the price action, Carl, isn't that a bit sketchy here? Well, we're having a compression, but great candles from that like green. So I'm guessing, as I guessed dangerously before, no, there isn't anything there. I mean, 140 is not a substantial ground number. Look, sometimes you get that little pullback. It might have been precipitated often by a bad day in the broader market as well. And it just causes a bit of profit taking. You get that compression inside this little point of supply. But look, I'm scrambling for excuses as to why it just pulled back a little bit. The trend overall is still fantastic. So let us then, for completeness, head over here and check out ON first. And a lot of this will depend on how Icon is performing. It can be a bit slow. Well covered, 24 brokers. But look at that average price target there, below the current price. That's why we've got the minus 4.6%. In terms of the ratings, 5 strong buys, 16 buys, 9 holds. I think that's quite positive. No sells, no strong sells. That's important to me. EPS line, not exactly bottom left, top right. In fact, through here, quite tough. But we do know semiconductor stocks in 2020 had it tough as a sector, really actually through there. But a good bounce back and expected to continue. 21% growth rate, way above the market average. And this PE looks really low to me. 17.5 for 21% looks crazy low. And I know when I see that, I know my spreadsheet's going to love it. And when I look at 17.5, I just need to then look back to the 5-year range. It's definitely at the bottom of the range, slightly beneath that 19.13. So I think this looks very, very cheap, actually, based upon my valuation. So ON Semiconductor, nothing in here, which tells me I can't follow that really, really great looking chart. And then the final one from Perry, MYRG. Thanks, Perry, obviously, for doing all your work. I know you really commit to these sessions and bringing me some great stocks. And that does take time. I know how much time it takes to scan through that US market. So I really appreciate your support. And everybody else should really appreciate Perry's support as well, because he does give us some great charts to look at each week. We are not getting a lot of consensus data here. You can see only the 2 on this one. And that doesn't mean it's good, and it doesn't mean it's bad, ladies and gentlemen. It just means it doesn't have as much broker coverage. It is what it is. The price target, roughly where we are, 146, 1.8% upside, 2 strong buys. EPS line, actually very good and expected to do so, but the broker's not able to go much further than 1 year out. So when I say compound annual growth rate of 90%, that's over 1 year. So I understand some of the limitations, I guess, of this methodology, of the spreadsheet, when it doesn't have enough data to make a good call. And therefore, we might treat some of that with a little bit of skepticism. But, if you can get that growth 19% at a P of 23, you do it any day of the week. And that 23 is so much lower than the 5-year historical range. I think we're getting it at a bargain compared to what other people have paid for in the past. I know there's not a lot of data, but I can't see any reason why you couldn't take a really good looking chart on MYRG, which is MYR GRoup. So I guess, again, I always talk about the uninitiated. If you listen to me the first time, you're getting a bit of a feeling for how I do my analysis. Look, I'm still me personally 100% technicals. I like to look at the valuations from time to time, especially if it's a stock I don't know. But I do know the people that listen to me, they like that benefits, like that hand-in-glove approach where you've got the technicals, you've got the fundamentals backing you up, and it does appeal to many people. Let's keep moving here. I'm going to head to the streamers who have been very patient. Hello, Rashang. Can you please let us know what 2 indicators you're using and how we can add them in ThinkMarkets? Well, Rashang, as I said, the 21 and 34 exponential moving averages, my short-term trend, and you just plot them, literally plot them on your chart in ThinkMarkets, and then 144 and 233. And it's a very specific question, so I think it deserves a specific response. If you're in here, which is your ThinkMarkets platform, we are going to go into this button here. That's right, that which is the little function. And we're going to look for our moving averages. You can see answering a question from the Thursday crew. We talked about this idea of average true range and how we use it in our stop loss application. And what I've done, I double checked the indicators we have on our platform. We have these wonderful ATR trailing stops, which you can actually set to that 2 ATR distance. And whether you're going long or short, you can see it tells you straight away. You don't have to do any maths. It just plots it straight on the screen where your 2 ATRs are. And actually you see often coming in at really great places in terms of where those peaks and troughs are. So what a great indicator that is. Not on all trading platforms at all, but we certainly have that one. But I was trying to find you the moving averages in here, which if we go down to M for moving, there we go. You plot it there, Rashang, and then you just put it on. But make sure you're using the exponential moving averages, super important, not the simple ones, okay? Very important we got EMAs, and just plot them on. Now, what you won't have, Rashang, is the pretty green and red zones, but it doesn't change the application of the methodology, okay? If you don't have the colors, as long as you have the moving averages, you're fine. Hopefully that addresses your concern there. Kirsty asking about JOE. Joe, let's check out Joe. Oh, just a great looking chart. Hopefully you're already on it, Kirsty. You're not waiting for me to tell you this. Look at all the wonderful, oh my gosh, look at these wonderful white candles we had through here. And if you're looking at charts that don't have candlesticks, you're not looking at charts, let's face it. And hopefully you all agree. You've been listening to me long enough to know that just candlesticks are kind of the final piece of the puzzle of everything, aren't they? You can almost just trade on candles. And it looks amazing. Again, there's no reason to not do plus 1/3 here, Kirsty, but you are a bit of a ways away from your light green zone. I know it's frustrating when I do this because we weren't there on the day to buy it, but that's where we want to get involved. As close to that light green zone as possible with the nice white candles popping off it in our long-term uptrends. And usually we're going to do pretty well. We won't do well all the time, but usually we'll do pretty well. Because there's going to be a time, well, that's not an example there where you would have got in, but I'm trying to show you an example where, you got a bunch of white candles here, didn't keep going up, did it? Sometimes they go down as well. But it's just about, just being consistent in your approach. And I think you'll be fine. JOE, let's check it out here for Kirsty. And we are going to see Joe K. No data on that one, Kirsty, unfortunately. So in the interest of getting to everybody's request, we'll keep moving. The next one for you, however, is STRS, which looks very interesting, actually. It's a nice little turnaround play. And what I'm noticing, Kirsty, is these, okay? A lot of property stocks coming up now in my scans, and some really, really good looking ones. I'm not sure if this is the best one I've seen without doing a new scan here, which would literally take us hours to complete in terms of me getting to the bottom of it. Probably can't show you some better ones. But what is holding me back here, and maybe I'm being a little bit overly cautious on this one, is just how many black candles. And you'll often hear me saying the leopard doesn't often change its spots, and I'm just worried about how many black candles I see on that one, just more than I probably feel I should. But otherwise it's fine. The only other issue here we have with this one, because it's not bottom left top right, that doesn't make it bad. It just means that you are going to have to take into consideration now the possibility that you might have a little bit of a pause at some of those points of supply. Whereas we've seen already some of those ones that are bottom left, top right, they don't have anything holding them down. There's no emotional baggage in the market. But that doesn't mean you should go all bottom left, top rights. In fact, at the opposite, you still need to take these. You still need to have a mix of setup styles in your portfolio, and mix between those bottom left, top rights and some of these as well. Is this the one? I think it looks very, very good, but maybe at risk of, I do think it's going up. And here's the contradiction perhaps. I think this will go up, but I'm not sure if I want to buy it. Okay, how about that? I think this will go up, but I'm not sure I want to buy it because I'm not sure this is going to be the best turnaround play that I'll find today. So let me put a pin in that one for you, Kirsty, and let's come back. And maybe it will be, and maybe I'll change my mind by the end of it. So I'll probably go this one over the last one, simply because there's well, there are still a few black candles. You can see how the leopards kind of behave, don't they? Maybe not as many as the other ones. We've probably got a bit more room to move into the next point of supply. And the price action's quite clean through here. And plenty of white candles coming through in the last 2 weeks, certainly overwhelming black candles. Could I go 1/3 here? Again, I'm going to just hold back on that. I do think it's going up. I'm not sure this is going to be the best turnaround play we're going to see. When we see it, we'll know it. But it's very good. And if you've got an affinity with Howard Hughes Corp and you really like the story, then no objections to adding on that. For your peace of mind here, let's do this one. I keep going to the wrong place, don't I? Let's do this one for you, Kirsty, and let's go to HHC. And no doubt we'll get some broker coverage on this one. It's quite a big company. Oh, 3. Okay, well, there you go. I thought we'd get a bit more than that. Maybe it's a different Hughes. I'm thinking, I know there's a big Hughes corporation or something out there. Let us say that we do have a price target well above the current level, 111.67, very bullish. We have one strong buy, 4 buys, no sells. That's good. EPS line, a bit wobbly, but that's okay. That's COVID. That's recovery from COVID. So we can forgive companies from struggling during what was an unprecedented time. I can't forgive this though. This is a bit weird. And then apparently we're just going to go back to amazing growth. And maybe we're suffering from the fact we've only got 3 brokers here. Our EPS growth is 33%, which obviously we know is way above the market. And certainly 27 is not expensive if you can achieve that. And it's not expensive. Well, it's not expensive compared to the 5-year range. We don't have a growth rate here because of the fact we're losing money. So you can't get a compound growth rate. It's just maths when your starting point is negative. If I start here and look forward to here, it's saying that my EPS growth rate is minus 2%. And I've got an issue here with FFOP. I don't know what that is. I've never seen that before. Don't know what that is, but it's here. So that's your minus 2%. That's your minus 2%. You see that through there? That's falling. And then I've got reported EPS, which is slightly different. That's 12%. So look, I'm going to say we're suffering from a lack of brokers here. We'd love to have more data on this one. And that it makes it a little bit tricky, doesn't it? When you see that we don't have that, that emphatic confirmation in those valuations. Look, I don't mind the chart, but let's see if we can do better today. OPRA, that one's a bit better. We've certainly looked at this one in the past, and this is for HUZL, Huzzle Finance. Looking quite good here. I don't think there's any reason to get out just yet. However, I am just noting that we're getting close to a big run number at $30. So if you do start to see the black candles pop in around here, then I think you're extremely warranted, almost for me compulsory, to go minus 1/3. I don't think last night's candle is enough to do that just yet. And don't forget, it's just a third. We're not doing the whole lot, right? Other than that, happy holder. No reason not to continue to be in this one. I can't remember what we said. I know I've pointed to various buy candles in the past. Hold. Would I buy it here? Not on the basis of that last candle, not on the basis that it's too close to the round number. I could consider it after it breaks the round number with consolidation, but not until then. And it's a little bit far away from my light green zone. So I'm going to go hold with a view to exiting if we don't see the right candles in there. And what are the wrong candles is probably the way to put it. If you're long, you don't want to see this individual, okay? And you don't want to see this individual's best friend. They often occur together or in clusters. And if you saw either of those, that would be a reason to get out. And look, the body doesn't have to, typically we're talking about these small bodies, aren't we? So these are our supply side candles, okay? Or our supply buddies. There we go. Let's keep moving. DKNG, which again, I'm going to point you to the perfect candle to buy there. This one, very good. I'm not sure if we would have got in on that day, because I reckon on that day we would have had 100 other candles that were closing on the highs. But it's very good, and this is your perfect candle. I mean, this is just compulsory 1/3 buy. Zooming out a little, I should get back to my default zoom to see if there's anything back here. Okay, is there anything back here that we need to be concerned about? This is so fluid on the way down. There's really nothing to worry about. I mean, up here you might have an issue, but we're so far away from that, I don't think we need to worry about it. So happy holder. Could I buy it? Look, there's a little bit of supply coming in that shadow there. We talked about the supply buddies in that one there, but not sinister enough to tell us to sell. I know we hit the $30 there, a little bit of supply. It's probably just that. And you might say, well, what's the difference between this at 30 and the other one at 30? Well, this one got to 30. It's been at 30 before, so 30 is not a surprise. And it's already had a consolidation near 30, so that's not an issue. The other one is extending towards 30. They're very different. And actually, we got above it here, which tells you 30 wasn't as much of a big deal because we've been at 30 before on this stock. Not enough to buy it, but certainly more than enough to hold it. 100% a holder. You can see in the past, we added a third through here, didn't we? I just changed the color of that one to green. So if you did get on it that day, well done, and happy holder here. Now, we don't often talk about, we probably should talk about it more, your stop losses. And if you want to move your stop up in this, I think you could quite comfortably get it to a break-even stop, and then really, like, who cares where it goes from here, sort of thing. Yeah, I know I wasn't here on this day, on this big white candle, but that is your second plus 1/3, and you're holding both of those at the moment. DraftKings is the company. I'm pretty sure we've looked at the fundamentals on that before, Lawrence, so I won't do it again today. Let's head back to the Zoomers. You've been very patient, thank you. BX from Daniel, which is, I did a double take there. That's BXB, which I'm in. How have I got? Look, I've got a bunch of Aussie stocks in here for some reason, and that is not supposed to be the case. You can see I'm in my USA, and the Australian stocks have invaded. I'm not sure why they're in there, but I will remedy that situation. Don't worry when we catch up next. What I will find in here somewhere is BX, and that's why I did the double take. I saw Brambles, and I thought, that's not right. BX is one above. Blackstone Group, a nice turnaround play. So we talked about earlier on, we looked at 2 potential turnaround plays, and this is getting me excited. So I think this is the best of the 3 we've seen, and certainly here, there's your compulsory. That's your plus 1/3, but confirming really nicely last night. Look, the only issue I have with it, and it's not a major issue, is that we should expect a little bit of supply there. But I love this. I love the way it's pushed off this zone. So we do know that in the downtrend, once we get beneath the light green zone, you can see how powerful that light green zone is. Even the short-term zone is at defining where your bull market, key bull market areas are. But once you get through, it starts to go amber. That's not a good sign. You get beneath it. You come up here, you test it, you fail at it. You'll find that it'll tend to restrict upward price action. Okay, and I don't know why it does it. Honestly, I don't know why. It just does. Okay, and I don't need to know why. And if you're a person that needs to know why stuff happens, I think that's very admirable in everyday life. I think you need to know why the moon continues to rotate or revolve around the Earth, and why the moon doesn't come down and collapse upon us. I think you need to know that. So it's very important you understand why that's the case. But you don't need to understand why stuff works when it comes to technical analysis. If it just works, then just bloody use it. So we can see that when we go from these moving averages pushing price down to pushing price up, that is the turnaround. That's the key. I don't think we had it here, did we? We didn't really see it definitively occur there. Certainly not there. But it has occurred here. And it's occurred with the white candles coming back into it. Okay? And I think the other thing we can talk about with technical analysis is we can make it very complicated, but at the end of the day, all my style of technical analysis does is reflect how the balance between demand and supply changing. So here, is very much your supply greater than demand, your supply side market. And when that moving average, the long-term moving average goes to amber, it's just telling you, hey, obviously supply greater than demand, but it's telling you, even through here, you can see just through here, that once again, supply and demand are equal. So something must have happened. Demand must have increased, and or supply must have decreased, obviously. There you go. So either of those are good things. People stopped selling as much and or people started buying more. Okay, so the fundamentals for this stock have changed, or at least that's the viewpoint in the market. And white candles are very important to tell you that we've gone from distribution where those algorithmic fund manager orders are just selling to the market to now starting to buy into the market. And we're seeing supply give way. And I think we're in a bit of a supply vacuum here. I've talked too long about this, but I really like it. The question will be for you, Daniel, whether you buy it on last night's candle in the face of, let's face it, there's a bit of a pos there. I just think it's so good that I think you do and give it a go. And this is the other reason why we have this methodology of just give it a go to see how it goes, and we're not going to bet the farm on it. Now let's put that there on the basis that this is our best turnaround play for the day, which is it certainly qualifies as that, I believe, so far because of the move, the extension. That's a little bit of a fly in the ointment, but that's turnaround play. Sometimes you've got to take that leap of faith. Okay, let us very quickly head over here and check this one. I'm curious now because we've said, look, it's our best turnaround play today. So for Blackstone Group, 16, finally we get some coverage again. Brokers a little bit ho-hum on it, 102.31. We do have 5 strong buys, however, 10 buys and 5 holds. No sells, no strong sells. That's important. Still retrieving there on the historical data, which has come in. EPS, let's see, what was that before? FFOPS. I've never seen that operating. I don't know, operating something OP. EPS is what I'm more familiar with, forgive me. Bottom left, top right, yes, looks good. But coming back in 2023, that's not great. But for whatever reason, there's a blip. It's going to get better to the point where if we reset this to the default, we've got 17% compound annual growth rate, much better than the market. And if I see 17 here and I see 16 here, it's usually a pretty good deal. It is below the long-term average there, so I'm not sure why my spreadsheet doesn't like it, to be honest. It's making me double check everything here. I mean, I programmed this thing, so it should do what I think it should do. This all makes sense. I'm not sure why. I'm not sure why it doesn't like it. I would have thought that would have been higher, but I will defer to my spreadsheet's better judgment, just saying that maybe that's not low enough or that's not high enough. But I can't see any. There's no red flags in there to tell me I shouldn't buy it. Simply -3% is not a deal breaker, and this has got me concerned now. And I won't do it on screen. I won't try and figure out if there's an error on screen, because it'll waste your time. But it's weird that everything else is checked out so well. It's making me feel I've got a setting wrong here. And in the interest of moving us along, obviously, let us keep going. But look, there's still no red flags there. Okay. Oh, it's got me thinking. That's going to frustrate me now. That's annoying. Okay, let's keep going. So I'll do this one. I didn't do Riot yet, which is not Rio Tinto. Riot platforms. Holy moly. We're seeing the cleaner turnaround plays here. And there's your compulsory buy, there's your compulsory buy, there's your compulsory buy. Even that's not too bad. Is it compulsory buy today? Like, geez, it's a long way away from the green zone. What can I tell you? Look, I can't see any reason why you wouldn't do it. There's a, can you make reward to risk work? I mean, if we sort of conceded a little bit on the last one, it's just too far from. I'm going to go. If you've got it, hold it. Like you've done really well. I'm just going to refrain from a buy. It's just too far from my green zone. And added to that, we've got that point of supply. But what an amazing chart! And it shapes up here as this textbook, isn't it? Turnaround type of setup that we are looking for. So well done. Hopefully you've got that one, Daniel. Let me know if you do. Thank God it's Friday, says Max. Best sesh of the week. I agree with you on that one. It's a shame we don't have more people in here. It's the lowest attended of all my webinars. It's the one that gets the lowest views on YouTube. The highest attended, obviously, ASX one on Tuesdays, and then the ASX video. And I just can't shake ASX investors enough by the shoulders to get them here. I just don't know what their problem is. It escapes me. Maybe you can tell me why. ASX investors won't come and learn about US stocks. Because I guess that was you at some stage too, wasn't it? FLEX, look, I think it's very, very good. I can't see any reason why you wouldn't buy it. Yeah, look, is maybe there's a little bit of an issue there at $30, but this is just so irrelevant. Is it as good as some of the other ones we've seen? I don't know. I have to go through them all in a row. No, look, I mean, just that candle, just the last little candle, the little upper shadow there, a little bit of compression. He's just losing a little bit of momentum. Like we had a breakthrough here and it just hasn't done a lot with it. So I'm going to refrain from going and buy just on the basis that we're going to find literally no fewer than about 500 or 600 charts that look like this, right? You have to, at some stage, even in the most subtlest way, differentiate, draw a line. You have to have a reason to draw a line through one compared to the other. And as I said, just that little upper shadow on the last candle there, and it's nitpicking at its utmost, because if this was in Australia, we'd be buying it, right? Because it'd be the best stock over here. But yeah, I'm just going to hold, 100% hold. But I'm just going to refrain from just going buy on that one. ETN, and you're kind of, I guess, relying on my experience there. Happy holder here. We've done plus 1/3. Maybe that's why you're asking about it, Max. No reason to sell that. I know there's a black candle yesterday, but came back well yesterday. 2 days ago, there's a black candle. Yesterday came back well. And there's nothing at all in the chart to suggest that it can't continue to go up over time. CX. This one actually excites me. I like the size of the black candle. You know, that's interesting. That's got a bit of momentum going for it. Would have preferred it to close right on the high, but I don't think it's a total deal breaker. What will be important is I would like to see it close above that high. And it's quite obvious. I mean, it's just clear as day why we started to get a little bit of supply here, isn't it? We're literally responding to that point of supply. And it got very close to closing above it, I expect, because I can tell you here that the high there is 735 and the close here is 734. And before that, the price action, we were in a downward price action. So we haven't necessarily done this. So look, it's very good. And again, just maybe nitpicking at its utmost. And I will go out there and just check in the corner of my eye if there's anything that we need to be concerned about. I think that's far enough away not to be too concerned about it. It's very, very strong. I look, clearly if you've got it, hold it. I'm going to, famous last words, refrain from a buy, but I'm a millimeter away, an atom away from calling that a buy. Because let's go to FTNT, which still looks good. If you've got that on this day here or this day here, you're fine. Would I buy it? I can't see why you couldn't buy it. Again, just, is this going to be the best one today? Okay, but 100% hold it if you've got it. And I know why you got it. I talked about it a few days ago on AusBiz. Last night's candle's fine. We saw a little bit of a pullback, but it looks great. I mean, it is a classic buy pattern. But the only reason that we might hold you back is that black candle. But last night's close was so strong. Yeah, look, I'm going to go plus 1 thing. I can't see any reason based upon last night's close not to do that. So let me just change that around. And it's just very clean through here, isn't it? It's not, the price action is good. It's not dealing with that point of supply like the last one is. Max saying, things are going well. Everything you do is super important. I appreciate that, Max. We're loving it. RIVN's less smelly. Let's have a look at that one. RIVN. Well, there you go, isn't it? That's had a bit of a pop. I probably told you that I couldn't buy it, but if you had it, hold it. That might have been my last message. Could you buy it now? I don't mind it. I think it's more of a hold than a buy. Just look, obviously last night's shadow is a little bit concerning, but this is a massive candle here, and I wouldn't be selling at all. So he's Max saying he took some off the table last night. Only at the close, I expect, because otherwise it's 100% hold. I don't think you should take too much more off the table, Max. This is not personal advice. I don't know your personal financial circumstances, totally general advice, but I'm saying from my point of view, I think there's probably more in it. If you, to take some off the table, somewhere down there, a close down there, black candle down there, I think that's where we're conceding that the froth and the excitement that's come back into this one has maybe dissipated to the point where we need to act upon it. But happy holder in the meantime on that one. For David, HUBB, which is going very, very strong. I would have said here that this candle is a compulsory buy. It looks great, and it hasn't done much since then, to be honest. But no reason to sell it. Would I buy it based upon last night's candle? I think it's very strong. No major objections. It's all blue sky. It's not that far away from the green zone. These two little candles bother me, but yeah, last night's candle was very good. Look, I can't see why you couldn't. I might have liked it maybe closing on the high. That's all, but it just got pretty close to it. I'm, again, nitpicking to the nth degree here, aren't I? Just simply because I know there are just so many opportunities out there. So I'm happy to go plus 1/3 on that. If you've got to obviously hold it. Is XAI trading yet? From Jill, I don't know. Is it trading? If you've got a ticket, is it literally XAI? So I don't know. Let me know what the code is, and I can tell you if it's trading, because if it's trading, it'll be on the screen. And going to Nicola, Spot and Shop. Let's have a look at Spot. Looking great. What did we say about this one before? I can't recall. This candle here is very, very good, just for your reference as a buy. Last night candle, nothing wrong with that. A little bit of an upper shadow, but I'm still pretty happy with this. If you've got it, I would be happy to hold it. Looking for points of supply somewhere up here, probably, and that's miles away. That's such a long way away. I don't think there's anything to be concerned about here. If you don't have it, could I add a third? I would have loved a higher close last night. So again, just in the interest of finding the best of the best to add tonight, I'm just going to go pass on that. But certainly 100% hold on this one if you've got it. And then SHOP, which is Shopify. We did go plus 1/3 back here, and last night's candle was amazing, of course. And you can see here just how the price action probably wasn't as good as it could have, and then you've got the close above it, which is what we were waiting for on CX. We're waiting for the close above the point of supply. If you're not sure what I'm talking about, there's the point of supply and the close above it last night. Therefore, does make this one for me a very simple plus 1/3 on that one. I do have a bit of a point of supply in the past. Having said, let me just extend that across and see when I zoom out what that's all about. Yeah, look, it is. I don't think it's insignificant, and I think it's probably kicking in somewhere around there. But I don't think it's a huge surprise to us either. I mean, we've had a substantial consolidation very close to it. Does that change things for me? Look, it does a little. I'm going to stick with the plus 1/3, but everything's relative. We might find a setup that looks as good as that with the candles, breaking out of that little base pattern there. Trends are turning up instead of long-term trends just turn up, and it doesn't have the point of supply. Okay, so it's about getting to the end of these sessions and saying, well, okay, that one really appealed to me. TWLO, I've got Osby's pinging me there, so we don't have long to go. I don't mind this one. Nice little pop there. A little bit of a point of supply here. I don't know if this is the best turnaround play we're going to see today, so I'm going to go hold it if you've got it. I'm going to say pass on the buy just on that one. For you, Nicola, Haraju asking about MYR, great candle last night. I think we might even be above that. So again, we're starting to see how to compare and contrast some of these with each other. Plus 1/3 for me there for you, Haraju. Very happy with that one. PLUG, and this is not going to get my vote. I think the long-term downtrend is still too powerful here. Yes, there are some good things happening, but I'm going to refrain. I'm going to refrain from that one because I think there are better things out there we can do with our money. CNVA, which is not that one. CNVA. I don't have a CNVA for you, Nicola. Just double check that code for me and get back to me on that one. CNVA you've got in your description there. IFRA looks very good. Let me just go weekly chart there. Yeah, it looks very good. So this is potentially a big breakout here coming. And on the daily chart, should we take that leap of faith? Look, let me just double check that there. I can't see why not. Is this the most exciting one out there? Probably not. Could you buy it? Yeah, I could buy it. I just think it's going to be a bit of a slow and steady one. But I'm happy to go plus 1/3 if there's something about that that appeals to you. Obviously, being an ETF. Funds from operations per share. There you go. FFOPS is a measure of cash generated by real estate investment trusts. Okay, specific to that industry. Thank you, Anonymous. Colin, the man with two first names. Even if you don't trade US stocks, Fridays are great to watch. Well, I hope so. Thank you. I think your session clashes with the call on AusBiz. Oh, what would you rather be watching right now? See, the call or me? A little bit of an issue there, Nicola. I'm going to go hold. Still white candles. I'm going to go hold, but keep an eye on it. I have to run, unfortunately, so because I've got to get to that AusBiz spot. They will be banging down my door very soon. Don't forget that you can attend those sessions on Tuesdays for the ASX edition, and then macro, very important. You attend on Thursdays because we go over the big picture stuff that impacts your portfolios. Next, reminding we do have our very important session coming up. I don't have it in here, but we do have it coming up. I do want to show it to you at the risk of not getting to AusBiz on time. The Traders Summit, so that's the web link there. Nick's got it in the chat window as well. If you're on YouTube, let me put it there. So that's the one on YouTube. You've got it now. If you're watching me on YouTube, maybe it worked, maybe it didn't, but I'll put it in the link later on. 22nd July, coming up soon. Come and listen to me speak live. And then if you're not a client of ThinkMarkets, you know the drill. You really should be for all the reasons that you already know because we talk about it every week. Follow me on Twitter, of course, for my weekly, my daily feature charts and shortlists and just great observations about markets in general. Subscribe to the YouTube page there and hit the thumbs up button anywhere you can find one to let me know you like what I'm doing. I'll continue to do more of it. Apart from that, it's been a pleasure chatting with you today. All the best if you're trading. Till we catch up again. Bye-bye for now. But don't forget, everything we've discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this advice, you should consider it carefully or seek the help of a financial professional. The rest of the information in that disclaimer is important. You should read it carefully. And if you have any questions at all about ThinkMarkets and our products, head to the website, download our PDS, or give us a call. Bye-bye.